Bitcoin has just closed its first green September in over 7 years. In today's video, we're going to be discussing what this monthly candle close means, what the short-term and high time frame price action are suggesting, and where Bitcoin is likely to go next. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be going over the monthly candle close, the weekly, daily, and short-term charts, discussing the most important questions. Has Bitcoin officially broken out of its weekly downtrend? Are we bullish, and what does this monthly candle close mean? Before we get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need, guys, to stay in the loop of cryptocurrency with Bitcoin and the relevant economic data. If you are interested in joining our VIP channel, we have over 642 members. You'll get access to trading signals with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. You'll also get access to our group chats, general chat, trading chart and education chat, help chat, video chat, news chat, and of course a trading setup chat for other members to post their ideas. So if you're interested in joining all of those groups, go ahead and contact me in the pinned comment above. We do have a sale still active. We're going to leave it up for another 12 hours if you are interested. Let's go ahead, guys, and jump into the video. So of course, Bitcoin has just closed out that monthly candle. We'll be discussing that very shortly, what it means, where it closed, and of course, what you should be looking going forward into October. But starting on the market data, guys, how are we looking? So of course, the 24-hour volume is down 44%, sitting at a total of 31 billion. This is totally expected as we enter the weekend. Volume, volatility, liquidations do generally drop toward the downside. Moving over to liquidations, we are down 47% at 29 million. So again, quite low over here. September has finally closed out, closing at 4.17% in the green, defying odds. Actually, this is the first green close September has had in 7 years. We take a look, ever since 2016, well, 2016 was that prior green candle. So 17, 18, 19, 20, 21, and 22, we had red closes for September. That poses the question, are we going to see a red October? We saw October is historically green. Maybe we might see a red October. We saw September is historically red, and we saw a green September. Again, let me know down below what you think. Obviously, we'll get into that in today's video and discuss the probabilities. But right away, let me know if you think we could see it flip on its head. Moving over to the volatility index, we can see the 30 and 60 day. Really not that much change. The 60 day is still pushing sideways over here, and the 30 day is actually falling. And as you know, falling volatility is a sign of weakness. So this is something we should be looking at when we're going forward, as we generally do see price action follow suit after volatility falls. We can see over here, the volatility index started falling. Soon after, the price action continued down. We saw over here, volatility index started falling. Soon after, price action started sloping down. So something to watch out for, something to look into, and of course, we're discussing that in just a moment. Moving over to liquidations, we can see of the 29 million in liquidations, we did see 20 million of those come from the short positions. Again, the market tapping that upside level of resistance. Moving over to the DXY. The markets are officially closed right now. The DXY did see a green end on that daily candle. In fact, wicking all the way down to around 105.6 and pushing back over 106. Once more, guys, while the DXY remains in this overall uptrend, the uptrend is intact until it ends. If we do break down from its uptrending support line, that will result in a correction in the DXY and could result in some short-term relief or even high time frame relief for Bitcoin and of course for the stock market. Now, considering where Bitcoin is testing current resistance, it will be very, very beneficial for the DXY to drop over here, because that could facilitate a breakout for the DXY and the end of this weekly downtrend. However, we have to remain objective. While this uptrend is intact, the uptrend is expected to continue, and while the DXY remains in its uptrend, that could force Bitcoin a little bit lower, so we are keeping that in mind. Alternatively, if DXY continues upwards and eradicates this current rising channel structure, again, there's a very low chance it does that, it's about a 30% probability, but if it does that and continues upwards, that will result in a macro uptrend for the DXY, and that will be very, very bearish for the stock market and for Bitcoin. Considering where the stock market is, it is in a very, very delicate position. If we see a continued breakdown of this level of support, we will see a high time frame correction towards this 4,100 level, which is going to be a POC level. As you can see on the Dow Jones, we have already seen the breakdown of that rising diagonal support level, and we have already seen a breakdown to the POC. So again, the stock market S&P 500 could definitely follow suit if the DXY continues upward. Something to be a little bit cautious about, something to be a little bit more aware about, because again, I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Bitcoin doesn't just move because Bitcoin moves. There are drivers behind why Bitcoin moves. What actually moves price action? Okay, it is buyers and sellers, okay? How do buyers and sellers make decisions to buy or sell on a high time frame basis, right? These are questions you have to be asking yourself. It is very correlated to what the economy is doing. It is very correlated to the strength of the dollar. And of course, we have to consider these elements when talking about macro trends, particularly macro reversals. So let's go ahead, guys, and leave it there for that. And let's jump into Bitcoin. So starting on Bitcoin, we'll talk about this monthly candle close. So this chart has not quite yet updated the monthly candle close, but we have now seen a monthly candle close, and monthly candle close came in at around 26,911. And we're discussing in the other video 2 days ago that the key price point Bitcoin will need to break above on the monthly chart to signify a shift in overall strength is the 27.2k level, this horizontal black line. So according to the current monthly candle close, we have actually failed to break above that in September. We could still break through it in October, but as of right now on the monthly chart, we have actually failed to break through our trigger level. So this close, although was green, was actually a bearish close. It signified that this downtrend is still intact on the weekly chart. This downtrend is still intact, developing on the monthly chart, and it is not looking particularly amazing. If we take a look at 27.2, 27.2 is not only the horizontal level over here, which marked the low points of these candles on monthly, that same trigger point we need to break back above to continue upwards. It also marks the bull market support band, lower band on the weekly chart. You can see it according to this arrow, this red line over here. But more importantly, 27.2 marks the downward diagonal resistance, okay? The downward diagonal resistance on that daily chart, which represents the weekly downtrend. So we did want to see that monthly candle close above that weekly downtrend to result in a high time frame reversal in trend. As of right now, with where that monthly candle closed, it is not looking amazing, right? We closed underneath that major trigger point. While we remain under that trigger point, we are under the weekly downtrending resistance, and we are still technically, although showing some degree of strength, we are still in a downtrend. we have to remain objective. Although we are seeing some degree of strength, right? We are definitely seeing some degree of strength on a daily chart. We're seeing the markets over B turn positive, okay? We saw the CVD rise. We saw RSI rising. We're seeing strength coming into this level of resistance. As of right at this moment, while we remain underneath 27.2, we are still under or still in this downtrend. Will that downtrend end? We'll discuss that in just a moment. But moving back to that weekly chart. So let's talk about this chart over here. From a technical basis, we have to see strength come back in on the macro chart. And to see that strength come back in, first and foremost, we have to break above this downtrending diagonal resistance. But from a technical perspective, we need to see some key levels cleared. Those key levels include the bull market support band on the weekly chart, which of course is this yellow, orangey channel, and of course the upper band of the Gaussian channel, which is going to be the upper band, this this green line, which is now this orange line I've gone ahead and drawn in, which is around 28 to 28.4. For the weekly chart to signify a shift in strength and a flip in direction, 28 to 28.4, specifically 28.4, has to be cleared. 28.4 is going to be, if we draw it in, it's going to be this candle high. This point over here, we can see we saw numerous amount of support at this level, okay? When we broke above this level, we saw a surge in price action upwards. When we broke below this level, we saw a surge in price action downwards. So we do know this trigger. This is a trigger point. This is a key level of resistance. And while we remain underneath this level, we have overall high time frame weakness, okay? We get above it, we have high time frame strength. So for us to expect the price action to continue upwards on a macro chart, we're talking going back to 30, back to 32, even higher, the first key level we need to break above is going to be that 28.4K level. So for us to break above 28.4, for us to even get back to 28.4, we absolutely have to break out of this weekly downtrending diagonal level, okay? If we go ahead and draw 28.4K in really quickly, it is going to be this horizontal green line. For us to get above and get into this range, we need to break out of this weekly downtrending resistance. As you can see, Bitcoin is currently retesting this level. In fact, we've now closed 1, 2, 3 daily candles underneath that level. However, we still do have some degree of strength over here. We are sitting above that daily 50 EMA. That daily 50 EMA has provided 2 days of support right now for Bitcoin, which is sitting at around 26.9K. A loss of 26.9K, a loss of that 50 EMA on the daily could result in a continuation downwards for Bitcoin. That could result in a rejection. Currently, we have not technically rejected from this trend line. We are still challenging a breakout. So the bulls still do have a chance to push the price upwards. However, the resistance is still intact. It is still remaining as resistance and is still giving the bulls a little bit of a run for their money. If we take a look at the RSI, if we do see a breakdown over here and the RSI eventually flips negative, that will result in a continuation back towards that 24.4K level. And you already know, guys, if we retest 24.4K, we will be retesting 24.4K from a position of weakness, right? We're underneath these levels, and that could result in a high time frame breakdown to around 20. Again, I'm not trying to be overly bearish. I'm objectively laying out the facts. If we see a breakdown of 24.4K, we lose a massive high time frame level of support, which is going to be this 480-day long level of support. So the big question is, well, the big challenge is, for better words, is can Bitcoin break out of this weekly downtrend and get over 28.4K, shifting the strength upwards and pushing the price to 32K prior to breaking under 24.4? Okay, that is the big question. Can Bitcoin get over this weekly downtrend and as a result break over 24.4K, flipping the high time frame strength bullish prior to breaking below 24.4K? So let's take a look, guys, at some of the data. So let's bring up our CVD. On the daily chart, we are looking relatively decent. We'll go ahead and actually get rid of the VRPV for now. On the daily chart, we are looking decent. And again, to really talk about the probabilities of a breakout here, we're going to have to go down to the real small time frame, and we'll discuss that when we get up to it. But looking at the daily chart over here, we're looking relatively okay, right? We do still have some levels we want to break above. The key levels to break above is going to be this level on the CVD. We do want to see a break over that level, and the next one is going to be this local high over here. So we have seen the breakout of this respective high. Again, this respective high coordinates with this one. This respective high coordinates with this one. If we want to see a lot of strength come through, we would like to see the CVD break through this upper level. That will be very, very, very bullish. As per the Marcus OB, we do have bullish momentum over here, but it is quite weak. We have this weak uptrend in momentum. We would like to see a little bit more momentum come through. Now, generally, we do see momentum and CVD flip positive prior to a breakout. We have seen that, so we've got these two ticks. The last one we're looking for is a breakout of this overall trend. Again, a daily candle close above this trend line will be enough to satisfy the breakout, and then we're looking for a break over 27.2. So we do need to see those things to satisfy a breakout. If we do get that breakout, of course, the weekly trend will be flipping bullish. So again, if we reverse this trend over here, we flip the chart. If you see, we have an overall uptrend. What happens when a trend is lost? Well, when a trend is lost, the trend ends, the price generally continues in the opposite direction. So we do still have a degree of support over here. If this level is lost, we can then expect a move down to our next level of demand, which is going to be the section between 28K and 28.4. That is a key level of support we were just discussing. And again, that is a key level of resistance when we flip the chart back. If we break above that level, we will see a macro continuation upwards, guys. So right now, we are challenging a diagonal resistance. We are seeing some degree of strength. We have not yet had that breakout, and therefore resistance is resistance until it is not. To talk about the probabilities of breakout, we're going to go down to a smaller time frame chart, but to outline the narrative and to outline the overall scope of price action to really inform you on what is going on. If we see this trend break, the next target is 28 to 28.4. 28 to 28.4 is a major level of resistance. If we break above that level, the macro charts then become bullish again. We become really bullish on the high time frame. We're talking about a push to 30. We're talking about a push to 31, potentially talking about a push to 32. However, if we fail to break above this downtrend, we still run the risk of retesting 28.4. And if we retest 28.4, the probabilities at 28.4 hold are very, very low. So let's talk about now, what is the short-term price action actually doing, and are we going to break upwards? So this is going to be the 4-hour chart. We can see we have a few things going on. We actually have this horizontal range. We're broken out of this horizontal range. We're looking relatively decent. So again, while we're above this horizontal range, so we're above over here, above over here, above over here. We're technically in this little uptrend formation. We're in this little bullish formation. We have a decent amount of strength. We are retesting our downward diagonal trend line, which is going to be this first trend line. I'll circle it. This is that weekly downtrend. You can see we've attempted to break out of this a few times over here, but failing to really get above it. And of course, we have our structural resistance, which is, of course, is this downtrending resistance, which marks it around 27.2. So that's where the relevance of 27.2 actually comes into. So again, we need to see a break out of these respective levels to see a shift in strength and a continuation upwards. At the moment, on this smaller time frame chart, it does look like Bitcoin is struggling to get up, and we do have this sideways consolidation with slightly slanted sideways consolidation going on. You can see it forming in this range. Now, this, of course, is a rising channel formation. A rising channel formation is a bit of a bearish structure. It is representing, we have this uptrend, but it's really taking a lot of time, a lot of volume, a lot of pressure to push any higher, and it can reflect as an area of exhaustion. So we do see this area exhaust and continue downwards. We could see a correction back into this range, and that would actually result in the loss of not only the daily 50 EMA, but of course would actually validate a rejection. So again, for the trigger point for bears to take control and push the price lower, it is going to be at 26.9K. You can see 26.9K is sitting underneath the hourly 50 EMA. If we lose the hourly 50 EMA, we are likely going to lose that 26.9K level and push towards 26.8. Once again, guys, we are technically on the short-term bullish, while we remain above 26.8. If we lose 26.8, that is when you should expect a continuation lower. So we're talking about the short-term probabilities. We should expect right now, we are in a rising channel formation. We have a degree of weakness. If the weakness continues and we break below 26.9K, that will result in a retest of 26.8. 26.8 is that last line of support. If we lose 26.8, expect a continuation back into the range. This will confirm the daily rejection from this level, losing that 50 EMA and actually then making the charts look relatively bearish. For the charts to push upwards, we do need to see a break over 27.2K, which is going to be this downward diagonal level of resistance. We can see again, this marks this level of resistance over here. If we break above that level, that will show relative strength. That will result in a breakout above the daily downtrend. That could result in a close above the daily downtrend and actually give the price the strength required to push upwards. So all in all, guys, what we are seeing, we're seeing bullish compression at support. We are seeing a downward trend line retest. This downward trend line is the weekly trend line. The monthly chart has not quite broken above that key level of resistance. So the monthly chart hasn't reversed the trend and therefore the trend is still actually down. We still have the resistance. However, the price action is attempting to break above that level. If we get above that level, expect a continuation back to 28 to 28.4. If we break above 28.4, expect October to be a very green month. Okay, I'm going to leave it there. Thanks for watching, guys. We'll get into the short-term price action tomorrow once this range is broken out. We've been discussing this level of resistance for quite some time. In terms of your personal decisions right now, again, it is the weekend. You should be more cautious. You should be waiting. If you want to take shorts here, this will be the ideal position, okay? We have a very, very tight invalidation, okay? Meaning we know exactly where these shorts will actually be the best time to close them out. If we break above this trend line, we know the trend is going to flip bullish, so it's a good time to be looking for shorts as your risk return is massively favorable. If you want to take long positions, if you're not already in those positions, just wait another day. Wait to see if this trend line breaks out. What are you losing? You're not losing anything if you're a trader. You don't lose opportunity costs, okay? You only care about the change between entry and exit. So wait another day, see what happens with the trend. If the trend breaks upwards, we get this bullish flip. The weekly trend is actually flipped out of that downtrend and developing an uptrend. Well, then we can look for entries toward the upside, okay? Thanks for watching, guys. I'll catch you guys in the next one. Cheers.